Hi everyone, thank you for joining us today. So I am Yasmin, KSU Student Affairs Officer, and next to me is Matthew, KSU's President. So today this is the second in our series of organizations workshops, and today we'll be tackling fundraising and presenting financial accounts. So as the title of the workshop indicates, the workshop will be split into two sections. So for the first, and hence we have also two speakers. For the first hour, we will be having Mr. Nathan Farrugia, who will be tackling the fundraising aspect of the workshop. Mr. Farrugia has led non-profit and for-profit organizations for over 20 years now, all across healthcare, education, technology, and hospitality. He has managed to raise millions of euros for great causes through a wide range of different channels, such as crowdfunding, social enterprises, and philanthropy. And then for the second part of the workshop, we'll be having Mr. Joseph Teuma, who will be tackling the presenting financial reports aspect of the workshop. So Mr. Teuma is an insurance and risk management graduate, and he is currently undertaking his ACCA exempt. Also, on a very fun note, Mr. Teuma has been KSU's financial officer for 2 consecutive years in the past, and he currently works with PwC Malta. So just as a general note, we'll be recording the event. If you have any questions, please feel free to either switch off your mic and just ask the question as we go along, or you can also feel free to type out the question in the chat so the speakers can answer your questions. I will now give the floor to Mr. Farrugia so we can start the first part of the workshop.
Well, thank you very much, Yasmin. Hi, everybody. I obviously can't see your faces because your cameras are off, but if you do ask questions, it'd be good to see your face. It makes it more human. As sort of given a bit of insight in the brief, I've spent 20 years on my knees begging people for money, often for great causes, obviously, because this has been a part of my life that I feel was a vocation. But at the same time, obviously, ran businesses and ran organizations. So it's really a balancing act between the element of raising funds for, let's say, the philanthropic element of it, the purpose-driven element of it, and also the element of raising funds through generating business and generating profit and value for stakeholders. So yes, we tend to see these things as different. However, a lot of the principles are the same. I used to tell people, you know, when I train negotiation, and I train negotiation at high level with CEOs and other organizational C-suite level, and also in sales and things like that. And so imagine you were the salesperson of a shop, yeah, selling a product, and someone came in and said, here's some money, and they don't take a product away from the shop. Yeah, so they've spent, I don't know, 500 euros on the TVs you're selling, but they don't take the TV. They just go with the feel good that they've given you 500 euros. You would say that would be impossible to sell. But actually, when you're running an organization that is for charity, yeah, that's what you're doing. You're taking money off people and giving them nothing. But are you giving them nothing, or are you giving them something that is intangible? Some sort of emotional connection, some sort of deeper value. Whatever it is, sometimes cynically you might say they're doing it for conscious cleansing. They're giving you charity because they feel bad about themselves and they want to feel good about themselves. Ultimately, it doesn't really matter in the sense that as long as the funds are used for the right reasons, why people give is very specific to them. And the best you can do as someone that's raising funds is create the opportunity for people to get what they want out of their interaction with you and your organization. So none of you are charitable organizations. De facto, you are organizations that are representing students. You have a very clear purpose. And it needs to be clear that the people that are going to engage with you also feel that connection with your purpose, because otherwise they will not engage. It's useless if I am trying to work with a corporate to give me a sponsorship for a charitable event if the CEO who calls the shots is not passionate about the cause I'm representing. or is not going to get some sort of ulterior benefit out of it, whether it's PR or marketing, or engaging with my other donors or the families that may be beneficiaries of the organization. There must be some quid pro quo. And this is not cynical. This is not, no, but I only give to charity because I want to get marketing. This is about how we as organizations can find ways to be able to create more than a zero-sum game. Because raising funds is much more effective when it is not a transaction. Okay, so if there's one thing I've learned in 20 years is that if you can make it beyond the transaction, you are going to be successful. If it's simply a case of you give me X amount of money and I will expose you to Y amount of students where you can promote your telecom or your shop or your retail or your product or your digital solution or your app, that is a transactional approach. And those will work if you have a really good offer, but you don't raise the bar when it comes to going beyond the zero-sum game. So if I can really find ways to inspire someone to follow me, and by follow me, it means perhaps pay to come to an event or sponsor my activity, then you create a relationship. And that relationship, if it is fulfilled, if the expectations that you promise are delivered, creates trust. And so what we are in when we're talking about the game of raising funds is that we are in the game of trust currency. Yeah, we are trying to create an opportunity for a transaction that is based on trust, not money. So how do you value your offer? How do you get people to understand the value of what you do? You may be very passionate about what you do. You probably are if you've decided to give your voluntary time to run your student organization. So you clearly have buy-in of what your mission is. How are you going to message that across so that people understand what's in it for them beyond the transactional? I'm going to expose you to X amount of students. So if you go back to the sort of Simon Sinek methodologies of starting with why, I think that's quite important. Yeah. So we need to understand very clearly what our why is and what the potential donor's why is. And I say potential donor in a wider sense. You know, it could be someone who is a donor, a philanthropist, someone who could be someone who wants to sponsor an event because they want to access your database. It doesn't really matter. They have to, if you can understand what their why is, then it's going to be much easier for you to speak the same language. And it's okay if your why is different to theirs, as long as you are both achieving your why with the relationship that you're creating. So if my why is I want to organize a great event to encourage as many students to become members of my organization, and the sponsor's why is I really want to understand how students think so I can design my product around their particular wants and needs. If we understand what that is, then we can organize something that is going to get benefits for you and for me at the same time. So you're converging your purpose. In essence, what you're saying is, what is the North Star? That whichever way we're starting from will lead us to the same place. And that takes homework. It's not something you can just give lip service to. It's not something that you can just guess, or you can just take your previous, as they hand over to you and you're the next generation of leaders in your organization, just take that as face value. You need to discuss it. You need to talk about it. And so when that's clear and it becomes the mantra, then you go out and you start talking about it. It also helps you then really narrow down what type of activities you want to do to raise funds, because those themselves need to fit in with your purpose. It also means that you potentially say no to sponsors who will not have that same value proposition when it comes to your North Star and your alignment, because perhaps what they want out of it is not what you want out of it, the relationship. So you have to be brave, and also understanding that whilst you are trying to raise funds, and the example we're using today, you also have to be brave to say no when the purpose is not aligned. But you should make up for it when it is, because you get more value. Yeah. So, as Yasmin said, I've raised millions of euros through a wide range of activities, and often it's sort of a bit of a cliche of the means to an end. How you're going to raise money to be able to deliver the purpose. And the example of Inspire, which is a charitable organization I set up in 2009, our goal was to be able to fund professional therapeutic services and educational services to children with disabilities. And we soon realized that we needed to raise 3 million euros a year to pay the bills, to be able to engage professional therapists, to be able to provide that service. We could not depend on volunteers. They needed to be professionally trained and give their time and dedication in a set way that we could plan and organize, not depend on volunteers who decide to turn up or not on any given day. And so we needed a commitment, which means that we needed to pay salaries. And 3 million euros is impossible to raise just simply from fundraising. Yeah, you need to be creative. And so what we started to do is look at best practice, what are big organizations doing overseas to raise money? And for us, it was a big ask. 3 million euros for a country with 500,000 people is huge. I mean, it's bigger than Children in Need in the UK that raises 60 million. So creativity is necessary. You need to figure out how you're going to engage a vast majority of the population in ways that tick different boxes. As I said earlier, everybody has their different purpose. Whilst we know that, we all have our pet causes. Some may feel that they want to give to help animals. Other people want to support cancer because perhaps, unfortunately, they may have had incidences within their family or relatives where, cancer was a situation. So not everybody engages with the purpose that we felt was important. So you need, again, to be creative around getting that message across. And so you use things like what ifs. What if you unfortunately have an accident and end up being a person with a disability? Who's going to help you then? So even, someone who perhaps wasn't really conscious about disability as a condition was made to think about, the way that life would change if they were in that situation, and therefore somehow connect with the organization. So this connection is important, and it's not bullshit. We're not trying to hoodwink people to feed for our cause. We're not trying to trick people into giving us money. It's really about understanding the social impact that the cause that we were working for, disability, has on a much wider scale. Not just the person, but also the family, the economy. We spin-offs of Inspire is the Lean Hospitalia Foundation, which I set up with Jobs Plus a few years ago, and again we realized that fundraising wasn't going to match the €1 million we needed a year to run employment for 600 persons with disabilities. So we had to access EU funding. We had to access national funds, grants. So it's trying to figure out how you're going to get to the end goal by looking around you and saying, okay, what works and what works in these times. We're going through a pandemic. The number of companies' priority at the moment is pay their salaries, not give to charity. How do you survive if you're depending on charity, if you're depending on handouts, when other priorities come into play, when you are in a situation of downturn? Again, this is the creativity that we need to think about when it comes to finding solutions. And for me, it's always been about, how can I get what I want to get while you get what you want to get? And this is usually open conversation. It's transparency. It's curiosity. It's think tanks, where I will work with a team of CEOs or corporates and say, guys, what can we help you with? And that's the first question. What can we help you with? Not the other way around. People turn back and say, I thought you were going to ask us for money or ask for help. And I was like, no, how can I help you? And they're taken aback, but it changes the dynamic of the conversation. And if you go to your potential sponsors, people that you're trying to engage in to support you, and you go, how can we help you? It flips it. They feel compelled then to help you. You're creating emotional currency. Because when you help someone, they owe you. And if they actually realize that you are there also to give back and to help them achieve their goals, then they're going to be more forthcoming, less suspicious when it comes to them giving you whatever it is that you need from them. I wanted to talk a little bit about sort of the things we've done and tell some stories around what works and what doesn't. And they are entertaining and interesting, and it's good conversation, but they are very, very specific to a situation or our organization or me as a leader. They may not work for you. But I'd like to talk about a few things and some lessons learned around that. Just perhaps cautionary tales, which might be useful for you, but also some ideas that might spark with some of you and go, "Ooh, I hadn't thought of that." So most organizations want to raise funds through events. We were chatting a bit about this before we started this seminar. In my experience, that's the worst type of fundraising. Because the amount of effort that you need to set up an event, the risk involved, whether it's weather dependent or other activities happening on the same day, you know, availability of volunteers or resources, suppliers that let you down. So many things can go wrong with events that, whilst they are great to engage your followers, your students, and create a great opportunity for social interaction, typically they're not great for fundraising. So my experience in organizing events has been use it to lobby, use it to get people together, use it to create social interaction, use it to get a message across if there's opportunity for speeches or talks or distribution of resources. But be very careful in thinking that they are great ways to fundraise. I've been proven wrong. We have had events that have done well, but typically you want to spend a little bit more money to make sure that the event is exceptional. And so that eats into your fundraising pot. So for the effort and the return, events, in my experience, hasn't been great, but they actually serve a very good purpose, and that is they engage with your brand. Yeah, the more people attend your events, the more it's an opportunity for you to expose them to how they might be able to engage with you. And so if it's trying to impress a potential sponsor by them attending an event and you have a full house with your students, that leads to the grant giving, which is the main fundraiser, where it's 100% profit, as it were. Yeah. So by all means, use events, but use them as PR activities if possible, and make sure that you invite the right people there who will recognize your influence by looking at the attendee numbers, for example, especially if you think it's going to be a good event with good turnout. Okay. If you think nobody's going to come, make some excuse and say it's cancelled. So, again, be a bit careful with events. Having said that, they are great platforms for you to be able to upsell. So one of the things that we used to do on a regular basis is we'd create a free event, but then we'd ask people to donate when they were there. And this sometimes, again, going back to this emotional currency, feels a bit like, you've had a great time, now give us some money. And that really makes a difference when when creating a sense of giving, because they're giving more voluntarily rather than they're having to pay to get in. I'll give you an example. I was invited to a nice gala dinner with 200 people, VIP event with a luxury brand, and I asked I was on the owner's table, and I asked, "Do you mind if we try and sort of raise some money with the people here today?" And he said, "Actually, yesterday we had someone from another organization, and they gave a little speech, just 5 minutes, and said, would you give generously?" I said, "Oh, that's great." I said, "How much money did you raise?" And they said, "Well, I had 200 people in the room, and we raised 2,000 euros. So an average of 10 euros per person." And I said, "That's good insight." And all they asked for was, "Please give us." Yeah. These are wealthy people, and they average, people gave 100 and some people gave nothing. So, and I said, "Okay, I'm going to try something different." And I stood up and I said, the usual spiel about Inspire and how we're making a difference. And I said, imagine, you've just had this amazing 6-course meal. How much would you have paid if you had been at a restaurant for 2 people? Because they were all couples. Okay. This generous organization, this company has just treated you to a lovely meal. Okay. So just in context, people know how much they would normally spend for that type of meal. So I've already set the bar as you'd normally be spending 50, 60 euros for this meal. So, you got that free. Yeah. So that's setting the anchor. And the next part is a physiotherapy session costs us approximately 30 euros for a 2-hour session with a physiotherapist. Can I ask each of you in the room to buy a physiotherapy session for a child on Inspire's programs? And we raise 6,000 euros. So when you create a context, people know how much to give and what they're being asked for. And this isn't about being cheeky. It's about trying to get people to understand what the value is that they are creating by whether it's a cash donation or their time, if they're volunteering time. So in the context of raising funds for your organization, you need to be able to figure out how you're going to quantify things, and you're going to have an expert in this after me, because your business plan, your reporting, the way that you look at your finances needs to explain specifically what's being done with the money. And this is something that I find, unfortunately, is quite poor with Maltese charities, especially some of the smaller ones, where they feel a little bit uncomfortable talking about what they do with the money. And transparency, remember we talked about trust currency? Trust currency requires transparency. People need to know, if you can listen, we need money to raise, we need some money because we want to buy a desk. Yeah, it's different to we need money to feed the hungry. But both are important. So how are you going to make sure that what you're asking for is contextualized in the emotional connection you're trying to get from the people that are giving, whether they're attending an event or whether they're sponsoring it? Especially crowdfunding, another way of raising funds, your communication strategy needs to be very clear. What am I giving to? What you're going to do with my money? And there's no reason why you can't be completely transparent in showing exactly what you're going to do with the money. In fact, there's a very strange analogy, but you can use it from well, this is how some people do weddings. Yeah, a wedding list. Don't give me money, buy me a this particular plate from this set. Yeah, I'm sure you've had that experience. It's amazing to see, I bought that spoon, or I bought that set, or I bought that dish. There's a sense of ownership of the donation, rather than just saying, here's some money in an envelope. I bought a physiotherapy session for that child. I contributed to these students getting this lecturer from overseas to be able to take their learning to the next level, which is different to, please sponsor us because we need to pay for flight tickets for our next event. So your communication strategy needs to relate to purpose. You need to figure out how you're going to inspire people to give, because they're going to see that they're contributing to something and there's some sort of emotional attachment. And if you can create a sense of ownership, even better. Yeah, we had a scheme called Friends of Inspire, and you give, I don't know, €1 a month from your salary, which you do the first time and you forget about it, but it's creating sustainable revenue stream. So the second part after events aren't great is sustainable SaaS type funding is the best way forwards, because what happens is it turns into passive income. Yeah, this is money coming into your bank account, which you don't even care about, because you've done the effort to bring people on, they've signed on, and they're giving regular amounts over time. So a subscription model. Okay, so if, in my opinion, events are the worst, subscription models are the best, because the effort you take to sign up someone gives and keeps on giving. Okay, in charity, we look at statistics and we know that people who give on a subscription model, so give us a monthly sort of standing order, will typically do so for 3 to 5 years. Okay, and most of the reasons why they stop is because they change bank account. And so they go, I didn't even know I was paying that. So creating subscription models are great ways of raising sustainable income. It doesn't work, obviously, if you need to raise money for a big project, because the money takes time to come in, it trickles. But from running your organization, covering your overheads, subscription models are great. But again, what do people get out of it? Do I subscribe and get some sort of value? What's that value? Is it information, insight, newsletter, attendance, discounts at events? I don't know, whatever it is that you're going to give in return for that subscription. Okay, so I would much rather take €2 a month from someone than a €50 donation. Yeah, because in the long term, I'm going to get more money. When it comes to corporates who are maybe a bit more business-minded, you need to think about return on investment. Right. So yes, there's the emotional connection as well, but you also need to be able to describe the return on investment for that funding. Why? Because they have other options where they want to spend that money. And if they purely look at it from a business perspective, how much more engagement am I going to get from sponsoring your event there instead of buying a banner on Times of Malta front page? And you say, there's nothing to do with each other. But in their mind, if it's exposure, they do, very much so. So again, you need to dig deeper into the value that you're providing to be able to give a return on investment. Okay. And, you know, sometimes it's, if we didn't do our job as organizations, the university would have to start charging fees. You might say that's a stretch, but actually, you know, to some extent it's true, because the services you provide, especially if they are free, would need to be paid for or not happen at all. And if they were provided by government, they would have to pay for them, and they would be paying eventually in their taxes. So, you know, again, this may be a bit of creative thinking, but you need to figure out how you're going to create that return on investment that, you know, if you don't support us now, you're going to end up paying for it later. Okay. Okay, here's one of my favorites, Piggyback Fundraising. I remember I was on the fundraising committee for the presidency a few years ago, and they were talking about Strina and the effort. I organized Strina with my team 2 years in a row, and I was like, you know how much effort and risk events take? Well, I've told you that story already. How can we find ways to get 5 cents off every single milk carton sold in Malta? And that's what I mean by piggyback. If people are buying stuff which are going to buy already, if you can get a percentage of that or something added to it, then the marginal increase to the consumer doesn't cost, but to you, there's volume. So how can you create opportunities for people to buy something that they would buy anyway, but part of that proceeds comes to you? Whether it's your students who are buying stuff on a regular basis, whether it's, you know, stationery or photocopies or whatever, that you make deals and say, I'm going to bring all my students to your photocopy machine, but I want 5%. And there you're piggybacking, because the person that's spending the money is going to spend the money anyway. And then you can differentiate between other products. The example of fair trade coffee. If you buy this coffee, or you can buy this coffee, they're actually probably the same bean. Yeah, but this is a sticker and it says, parts of the proceeds goes to the farmer and we skip the middleman. So, conscious students, which coffee would you buy? And so again, this is, you know, I'm not suggesting there's trickery in this, but the idea here is that you are creative in finding ways that are meaningful and not hoodwinking either the students or whoever is purchasing these products, but trying to find ways to piggyback on what's being done where people are spending money anyway. And it's I'm going to raise far more money if I can convince, you know, Ben not to give me 1 cent of every carton they sell, rather than me go out and organize a massive party. So what is it around you that people are spending money on, and can you add value? Can you add value? Because if I can go to a supplier of that particular product and negotiate a discount, I would much rather that discount comes to me than asking that company for sponsorship. I'll give you an example. In 2012, Malta did not have a team to go to the Paralympic Games. And I was the chairman of the Paralympic movement at the time, and I felt that Malta had to have the flag there. There was no government funding, there was no support. So we needed to raise, I think, 7,000 euros to be able to send an athlete and a coach and a representative of the committee there to London. Instead of going and asking a company to give me money, because I was already asking them for money for Inspire and other things, I went to Pampers and I said, they were sponsors of the Olympics, by the way. And I said, how about you give me 50 cents for every packet of nappies that you sell until the date of the games? And they said, yeah, okay, we can afford to do that. If I had gone to them and asked for a sponsorship of a few thousand euros, it would have been tough. But because they were giving me 50 cents of each packet of nappies, which is selling for 9 euros, we managed to raise 7,000 euros, which basically paid for everything. So again, a lot of vibe around, putting stickers of the Paralympics on their product. You can buy Pampers and help the Olympics. Or Paralympics. So they got all that mileage out of it, with less of a risk for them, because if they sold no Pampers, then they would have given us nothing. Whereas if they had to give out a cash sponsorship, that was it. So these are examples of how you can piggyback on where people are spending money anyway, and create opportunities for you to be able to either market something. Yeah. So one of the things we did is we worked with a supermarket where we basically bought stickers, Inspire stickers, and we asked them, can you give us, is there a range of products that you can afford to give the customer a discount to? And they said, yeah, we have some products that we can offer discounts to. I said, okay, don't offer them discounts. Just give the discount to us. So if you can offer them 50 cents on that particular product, pass that 50 cents to us. And we'll put a sticker on those products. And then we did a campaign to say, go to this particular supermarket, smart it was, and look for our Inspire stickers. And when you buy that product, you are helping a charity. You're paying for a child's therapy. So, it's adding value without the supermarket actually costing them much. This is attracting potential customers to their supermarket if they weren't already customers. So this quid pro quo again of helping each other out. Yeah. So again, piggyback marketing for me is or profit share. It's a similar thing. These are great ways to raise funds silently, without too much effort, and they're continuous. They keep going, and you may do it for a period of time. You may say, okay, until this particular date. We did a very good campaign with BOV, where we did a keep the change campaign. Yeah. So I don't know, your bill is for that month is 157 euros 33 cents, and you can tick the box, and the 33 cents is taken out and put it into the Inspire account. In 1 month, we raised 5,000 euros. People are not going to see 33 cents on a 150 euro Visa bill. But for us, it's accumulated to quite a bit. So again, opportunities for where are the people? The people are the people that have Visa cards. These are the people that are working with BOV. They're customers of BOV. There's absolutely no way I'm going to reach 20,000 people and ask them for 33 cents. But if the bank does, then it works. So it's a bit like, take the mountain to Muhammad. Yeah. Sometimes you need to figure out, okay, I'm a small organization. Some of you are small organizations and say, we don't have hundreds of students or thousands of students like some of the bigger organizations. Well, fine. Go where the people are. And they may not necessarily be other student organizations. Or if there's 5, 6, 10 small student organizations, together you are one big organization. And there's an opportunity for collaboration there that you can perhaps work together. As long as you understand that the North Star is all different for all of you, but you're all going to get there together and you're all going to benefit from it. So it's about sort of pushing your pride to the side and making sure that you are doing this for the right reasons. So again, collaboration, especially if you're working with corporates, they like to see collaboration. I was the chair of the Malta Council for the Voluntary Sector for 5 years, and we used to distribute, I think, 900,000 euros to organizations every year. And we used to double the money if they could show that they were collaborating with other charities. And I thought it was going to be a no-brainer, and everybody was going to collaborate, and they didn't. And it was astounding. We're saying we're going to double the money if you collaborate, and still, no, because this is my organization, and we do it this way, and we don't want to mix with anybody else. So, we struggled. But actually, we got to a point where we said, what, if you don't collaborate, we're not going to give you any money. And it worked. So, collaboration is something that, as funders, whether you're a corporate or you're a grant-giving organization, shows that you have the right ingredients to be a strong organization. Because a strong organization in the future is going to be one that collaborates. How are you for time? Okay. The last thing that I want to mention is social entrepreneurship. social entrepreneurship really is about creating a business that has a social purpose. Okay, now this is sort of blurring the line a little bit between what is fundraising and what is commerce. But as long as the purpose is clear, then it's okay. So here the idea is, can you create a product or a service that people are ready to pay for, that is value for money, that in a market people will buy? Because the litmus test is what people are ready to pay for. And if you can have a value proposition that says this service is worthwhile, then people will buy it. Whether the money goes to charity or to someone's commercial pocket, etc., is by the by. If there is a social purpose to it, then people are more likely to choose your service. So how can you create social enterprise? The easiest example for us was charity shops. Yeah, we collect stuff that people don't want. We create a circular economy with recycling or reuse, and we sell it back to people who can't afford stuff new off the shelves through the charity shops. So we have a social purpose. At the same time, people are spending money, which is helping us use that money to raise funds for therapies. So the charity shop is a good example of social enterprise. But there are plenty of others. It could be a service that your students offer. It could be a service that is related to your experience. You know, you may be able to do pro bono stuff related to your studies. You may be able to create opportunities for you to be able to collectively work on projects that companies are ready to pay for. Organize events for companies rather than to raise funds, and get paid to organize events. And so again, it's putting the sort of the thinking caps on when it comes to how can I create business value, but instead of the money going into a corporate account, it goes into the student's account, the organization's account. So social enterprise is something that is picking up as a concept. A lot of people are looking for social enterprises, even to serve normal business needs. Yeah, so well, I don't own because it's a trust. We have a cooperative called Empower, and it employs 30 persons with intellectual disabilities and autism. And it's a social enterprise. And we provide back office services to Middle Sea and to Playmobil. We provide them with a service. With Middle Sea, it's filing, it's mail shots, it's scanning documentation. It's the stuff that they would have to pay someone to do anyway, and they pay us, and we pay these people fairly, as well as take care of them and provide them with job coaching, etc. Same with Playmobil. We get paid by the sack or by the kilo or by whatever it is that is the measure of performance, and then we translate that into an invoice. When we're paid, we pay all our people fairly for the work that they do. So Playmobil is paying as much as it would anyone else to provide that service, but it feels good because it's chosen to fund or pay for a social enterprise service. How can you think outside the box to be able to create services that people are ready to pay for, where they would pay to go elsewhere? Another great example with Inspire is our fitness center. People will pay a membership to use our pool and gym, same price they would pay to use another commercial one down the road. The only difference is that their money, when they spend it for the membership, is going to help children in need. And that's a social enterprise. Yes, they feel good that they're helping us, but at the same time, they want value for money. For the price they're paying, they can't afford to come and find a dirty pool, or a gym with equipment that doesn't work. Yeah, so the service delivery needs to be the same. But that edge of people saying, I'd rather give the money to you guys for the service than pay a commercial entity is something that you can ride on as a nonprofit organization. So social enterprise is something that is extremely valuable, and it's sustainable, and it gives you good practice about the business world. Because once you understand how business works, then that's going to serve you in future life, whether you're going to become a lawyer or an accountant. So, the opportunity to do social enterprise as a student has a dual purpose. Yes, you're raising money, but you're also learning. Okay, there's more storytelling I can give you of my experiences, but perhaps it's time to open it up to any questions that you may have.
All right. Thanks a lot for the very interesting presentation. I think that you've mentioned a lot of interesting points that, even though they are not exactly applicable to student organizations, we can sort of take the main aspects of what you've mentioned and apply them in a way that would benefit us as student organizations. I highly encourage the participants to feel free to sort of turn on their mic and ask any questions which they may have. If you can't turn on your mic at this time, please feel free to write in the chat, and I'll be able to ask the question myself for you from my end, while maybe people are thinking about what kind of questions they want to ask, or while they're typing. I have a couple of questions myself based on what you've mentioned, basically. So at the beginning of your presentation, you sort of you explained that it's important to come to a why. So the why of your organization and the why of the donor. So why would the donor be donating to me? Why is it important what I am offering? So do you have any tips with regards to identifying the why of both your organization and of the potential donor that you are targeting? So what sort of priorities you should be looking at?
Typically, human beings are emotional. So I would first look at some sort of emotional connection. It may be, I don't know, that their previous education aligns with yours. You know, the next speaker has a very direct correlation to KSU. So therefore, it probably wasn't a very difficult ask to ask this person to give their time and, you know, and come and present. Why? Because there's a connection already. So looking for past connections is important. What I typically do is I'll do some research. Yeah, you can't be lazy in fundraising. You have to look at the data. You have to look at the insights and the information that's out there. You know, you plow through people's LinkedIn profiles or their Facebook pages, and you figure out what's interesting to them, and you use it as a topic for discussion. So this is aligning your why with their why. If you don't know your why, well, I think then you need to take a long, hard look at why you're part of the organization. You know, these things should be a priority. You know, your ikigai, you know, why you get out of bed in the morning, has to fit. And everybody has different reasons, and it's not about judgment. You know, some people are doing it because they want to gain experience leading an organization. Some people want to do it because they care about the profession. Some people want to do it because they want to be with friends and have something to do in the evenings. I don't know. That's fine. But you just need to figure out how you're going to align it with the donor or the sponsor or whatever it is that you're trying to achieve.
All right, thank you. We have a question from one of the participants, from Claire Payada, who's asking, so if you are a part of a small organization, if you're running a small organization which operates within a specific department at the University of Malta, for example, as is the case of some of the organizations or even present here, is there perhaps any specific way for such organization to be able to gain funds and tap into funds and reach a big audience despite their small target audience and their small amount of members, maybe?
Well, I think, you know, it's a mindset. It starts off with a mindset. If I think I'm a small organization, then I think small. If I think I'm a small but meaningful organization, I maybe think a little bit wider. So small may be the numbers, but isn't the numbers game all the time? Maybe my purpose is very powerful. You know, we have single people that have changed the world. Yeah, Gandhi, etc. Mandela. These are people. You know, I'm one person. How am I gonna change a country? Yeah. So the mindset is important. So stop thinking that small is numbers. Yeah. Think what it is that is powerful to you and meaningful to you, that you can widen. And it just may be a creative idea. Because once you start to test that idea out there, you start to gain momentum, you start to gain traction through degrees of separation, you can continue to engage through ripple effects. So if your small people can engage friends and family, they've already tripled their number. If those in turn can engage people living in their street, you've already increased the number tenfold. So it's about inspiration and creating that movement that widens. If you just look around you and say, well, you know, I only have 20 people in my membership organization, then you're gonna get stuck there. And I don't want to pay lip service and say, you know, it is easier said than done. But the challenge here is stop thinking small if you feel that you are small. We question that. One person can make a difference. So it's inspiring more people to have that cascade effect outwards.
All right. Okay. So I have
there is one more thing which is a bit more pragmatic. Find where the lots of people are. Yeah, find where the lots of people are, and then tap into that. This is this piggyback concept. Yeah. So if I have to sell tickets to, let's say, I'm giving an example. I make a deal with Eden Cinemas, and they say we're going to give you Cinema 6 for free on a Wednesday. Okay, fill it, and you can take the money from the tickets. Okay, that means I have to go out and I have to figure out how I'm going to convince 500 people to come to the cinema on a Wednesday evening. Right? I would say, thanks, that's a really generous offer. Can I have 50 cents of all the popcorn you sell on a Sunday? I'm going to make far more money. So see where the people are and go there if you don't have the people.
Very interesting. I think it's a very important concept to keep in mind, especially for us who are targeting students. So it's maybe a bit difficult sometimes to sort of get the amount of people that you wish to seek. Something else which I wanted to ask about, maybe while anyone else, unless anyone else would like to ask any other questions, is, so do you have any tips and tricks of how to effectively come up and portray a communication strategy? So how do you communicate with a potential sponsor? How is best to do this, to go about this?
My belief is that people buy and sell from people. Yeah, so you need to figure out how you're going to engage with the person that makes the decision. It's useless if I go in front of a committee that's going to decide how much money they're going to give us, and I don't know who's the person that signs the check. I am going to be at a disadvantage. So research is important. You really need to figure out who is the decision maker and how you're going to get to them. Yeah, and again, it might be someone who knows someone. It might be someone who has his ear. Sometimes the PA of the CEO is the most powerful person in the organization, because their word is what gets to the CEO's ear. You know, it's really about understanding who you're gonna speak to in the first instance. Who's the audience? And if it's a wide audience, if you speak to a whole company or a demographic, then obviously you need to have some science around that. And actually, you know, I talked about collaboration. Is there a student organization here that is the marketing people? Work with them. They're experts. You know, so it's about finding ways to reach that audience through a communication strategy that is thoughtful, it's purposeful, it's not accidental. I've found that most of the money I've raised, especially big sponsorships, were purely through nurturing relationships. And sometimes these start very, very small, and they say, I'll come to your event, or I'll give you some money. And then you keep giving them feedback, you thank them, you sometimes stroke their ego or work with them to go a little bit further, and you keep adding and you keep adding and you keep adding, and these become your ambassadors. Not only do they become donors, bigger donors, but they also become ambassadors and your champions. And when you leave your organization, as you do, the next people will come, and that person will continue to support. So you create legacy. I'm on the board of Inspire, but I'm no longer the CEO. But most of the people that would give money because I asked them to continue to give money, now I'm not there. Because the cause was powerful, not because I asked them.
All right, thank you for that. I have a last question from my end. So this is, I think, the last chance for anyone to ask any questions. So what I wanted to ask is, how would be best to portray your organization so it is more attractive than another alternative?
Well, I think here you're going into competition, and I'd be cautious around, worrying about what others are doing. I think you should watch what others are doing and learn from them, and learn what they're doing right, and learn what not to do if they're doing it wrong. But you really need to be your own person or your own organization. So imitation is the best form of flattery. So look at what other people are doing well and do the same. or better. Look at what student organizations are doing overseas. These are great ways to learn new ways of doing things rather than do the same old. But from a standing out perspective, for me, I think it's just being so passionate about what you care about, and making sure that that passion is transferred into your communication strategy, and making sure that the people you're talking to are engaged. If I'm not interested in law and I run a business and it has nothing to do with law, and I really can't see the engagement with lawyers, then you know what? You could have the most amazing marketing strategy and the most amazing communications plan, but you're not going to light a fire in me. So, again, it goes back to knowing your audience. Who are you engaging with? And what emotional currency can you create with that audience? And it's not who's got the fanciest website, or who's got the loudest voice, or who's got the biggest tent at Freshers Week, or wherever you're trying to attract attention. It's not that. It's really finding a way for people to engage with something more meaningful, which is not easily done, as you can imagine.
All right, thank you. It's been a full hour now, so we ought to give you a break. I think it's been very beneficial, and I want to thank you for your presentation. I think it's very important to keep everything in mind and actually consider. So as we were chatting before the event, so most of the type of fundraising strategy that we mostly resort to is usually events and fundraising to events. So I think it's really eye-opening what you've been able to communicate with us today, and I think it's given us a lot to think about. So we can start.
Absolutely. You need to engage, by all means do events and engage with your audience, but then do the fundraising after they're already engaged and they feel for your cause and they connect with you. It's true, a lot of my examples were charity related or philanthropy related, but the strategy behind them is the same. You just need to think of them a little bit differently. Just, use some creative thinking around the same concept. I gave an example of charity shop, but it could be selling other things. The principle is the same. So I hope that some of those did land. The ones that didn't, hopefully are causing you to ask some questions and scratch your head, which is good, because it means that there's some exploration that you can do with your teams on how you can recreate your fundraising strategies.
Right, thank you. I thank you for your time. If no one else has any other questions, we'll move on to the second part of the workshop. And so I will immediately give the floor to Joseph, who will be speaking about presenting financial reports.
So, good evening, everyone. By way of introduction, my name is Joseph Teuma. I graduated, as has been said, BCom Honors Insurance and Risk Management. I spent 2 years as financial officer at KSU, so I'm ecstatic that I'm back at the KSU office now after so long. And what I'll be going over today is by no means an introductory course to accounts, but this is just kind of tips and tricks and good systems you can put in place to better manage your organization's finances. So let me just present my screen so I can put up the PowerPoint and we can start. So obviously, if you have any questions, please don't be shy. You can obviously unmute yourself or leave a question in the chat box and Yasmin will ask on your behalf. So let me just go screen. So I'll be going through the role of the financial officer and bookkeeping for student organizations. Yes, so basically as an agenda, we'll be going over some terms and definitions. Some of you may find them basic, some of you may find them crucial because they do not deal with accounts. The role of the financial officer, a filing system. A filing system is very important to maintaining order in your books. Day-to-day transactions which you will be dealing with. The petty cash book, I will teach you about the petty cash book, show you a template and how you can use it in your day-to-days. Budgeting and its importance. profit and loss, because Yasmin informed me that the VO Council is putting more and more restrictions and being more stringent over how to submit your annual account. So we'll also go through how one can submit his annual accounts in accordance with the VO. And finally, we'll talk a bit about handover. So to start off quickly, Mela, terms and definitions, we have an asset. An asset is any item of value which is owned by the organization. So this can be, for example, stock, cash, debtors, buildings, motor vehicles, anything which is owned by an organization. These are split into two, current assets and non-current assets, also called fixed assets. Current assets are assets which we aim to transform them into cash within 1 year. So, for example, it could be cash, which is already cash, accounts receivable, which are debtors. So these are expected to be collected within 1 year, and stock, because stock is there as a means to earn money. Fixed assets could be stuff like laptop, motor vehicles, buildings. They exist in the organization for their sake. They give value for their sake, and they're expected to stay in the organization as long as their useful life permits. Liabilities, on the other hand, is the opposite of an asset. It is an amount that is owed by the entity to others. So stuff we have to give to third parties. These again are split into current and long-term. Current being short-term liabilities like creditors and suppliers. These we aim to pay them within 1 year. That's the rule, kind of, that we aim to pay them within 1 year. And long-term would be debts payable over a longer period, like bank loans or like bank loans from third parties, which span over 20 years. Some more definitions. Amounts payables are also called creditors. These are amounts which we owe to third parties. So, for example, we rented a screen for a drive-in cinema upcoming for our event, and we haven't paid our supplier yet. That would be a creditor or an amount payable. It is important that we keep track of these amounts payable, obviously. Amounts receivable are the opposite of creditors. They're called debtors. And they are amounts that we are still to receive by for services or goods we have sold. So in your case, it will be students mostly or sponsors. Now I say students, but it is not good practice that if a student comes to buy tickets for some form of event, you let him pay later, because we are talking about small monetary amounts, and it is best that they are settled immediately, cash on delivery kind of. So your debtors will mostly be sponsors. For example, you have a sponsor for 3 years with installments every quarter, or a sponsor for 1 year with monthly installments. So revenue is the total amount of money we receive during a given period, and expenditure is the total payments for goods and services during a given period. Well, a final slide on terms and definitions. Some important documents which you will be dealing with. An invoice is basically a bill showing items transacted with full monetary amount and VAT element. So if we keep with the same example of the screen rental, if we rent a screen from a third party, they will send us an invoice showing the service that they gave us, the rental of the screen, the amount, for example, €300 plus VAT, and the total amount of VAT plus the original amount, basically. So, some details that you need to keep in mind is that you should receive an invoice for every supply that you receive. So you're paying for anything, you need to have an invoice against it. An invoice or a cash till receipt. You can't just pay money and not have any papers against it. And the same goes if you are doing sales as an organization. You need to produce an invoice in this case. If you are selling an event and you have tickets, the ticket itself counts as an invoice, so you wouldn't need to produce another invoice. But in the case of a sponsorship, if you have an agreement where the sponsor will be giving you money periodically, it is customary, it is good practice to issue an invoice before each payment so that they will pay you. These are some details that need to be included on an invoice. The invoice number, date of supply, name, address, and VAT number of both your organization and the supplier, detail of the supply made, so sponsorship, rental of screen, and description of this good or service being transferred with that invoice. Well, total price before any discount, the rate of discount, if any, the rate of VAT tax, the price charged with at least each rate, and the total VAT charge bill. So once you have paid for that, once you receive the invoice and you pay, the supplier will give you a receipt. A receipt is a written acknowledgement that payment has been received by your organization. So when you are giving someone a receipt, you acknowledge that payment has been received. So you will be receiving receipts when you pay for services or goods. But it is important that you issue receipts when students come, for example, buy merchandise from you, or when they buy tickets for a tour, a trip abroad. It is important that you issue some form of receipt so that the student will know that they have paid, they will have proof. I suggest that every organization purchases a receipt book from the stationery. These are just plain papers with lines, so you can write the name of the recipient, the amount, and they will have all the details there. That will save a lot of hassle of having to create different receipts for every sale that you make. So moving on to VAT. VAT is basically, you don't need to worry much about this yet, but it is a consumption tax added to a product sale price. It represents the tax on the value added. This VAT I will be going into more detail later on during the presentation, and we will talk about who needs to apply for VAT, who needs to worry about VAT, and who does not need to worry about VAT. So variance is important because we will be talking about budgeting. Variance is the difference between a budgeted cost and an actual amount incurred. So a budgeted cost will be an expected cost, what we expect to incur. The actual amount will be what we actually incur. The variance is the difference. And later on, we will also speak about variance analysis, which is analyzing this variance. How did it come about? What did we do wrong? What did we do right? And finally, we have net profit. Net profit is very simple. It is the actual profit after deducting expenses from revenue. So income minus expenditure equal profit. Well, let's get started. The role of the financial officer. All right. Well, I try to summarize the role of the financial officer in 7 points, basically. I know most of you maybe have been in the role for some time now, and they can teach me about the role rather than I teach them. Well, the first point is management of organization's finances. And it is important that you keep the books and files in order. If you don't keep the books and files up to date, you will have chaos and you will not manage to fulfill your role correctly. Because if the finances are not portrayed well, if they are not up to date, if there are missing transactions, it is useless. The second point is timely recording of daily transactions. I say timely. Timely is important because it's useless recording transactions a week late or a month late. Timely recording means that expenses are paid and they are reflected immediately in the cash book. Receipts are issued on time. Invoices are issued promptly. You don't let things pile up, because once you let things pile up, you will start making mistakes and things won't start making sense anymore. Proper keeping of accounting records. This is self-explanatory, basically. Ensuring adequate funds are available to carry out proposals and meet financial targets. This would be what Nathan spoke about, so fundraising and creating sustainable events that will generate funds rather than be leakages for your organization. And ensuring adequate funds ties in with my next point, maintaining reasonable budgets for the term as well as ad hoc budgets for events. So you will ensure that there are adequate funds by budgeting. By budgeting, you are forecasting into the future and you will see if you will have available funds for that specific event or for that specific initiative. Without good budgets, you will not be able to meet expectations that you have set within the organization. Liaising with members of the executive is very, very important. You need to maintain constant communication with your team members. One, to understand what is happening in the organization, and secondly, to ensure that budgets that you have set alongside with them are being met. Not they are just disregarding them and spending and organizing without any consultation to the budget. And finally, maintaining an intricate understanding of your organization to create accuracy between the books and the organization's financial position. In my opinion, this is the most important point for a financial officer. A financial officer cannot maintain a good, cannot fulfill his role well if he does not understand the organization that he is dealing with. The finances tell the story of the organization. So if the financial officer understands the organization, understands its inflows and its outflows, it will be much easier for him or her to do a proper job, basically, of maintaining the finances. Moving on. So I'll start off with basically the filing system. This is by no means an exhaustive list. This is obviously up to interpretation, but it is some basic files that you can keep, which will help you keep yourself much more organized and keep track of things as they go along. So I'll start off with the bank file. This houses bank-related documents. So it is important to understand any agreements or letters you receive from the bank. Don't just disregard them. Maybe they will start recently they sent a circular that they will start charging 25 cents for each check. So it is something that your organization should know. Maybe you will start paying by Revolut, or paying by check, or paying by bank transfer. Because 25 cents per check is not sustainable for you. Therefore, I suggest that these are all filed in a separate divider in the bank file, the letters and the agreements. Next are cash withdrawal slips and cash deposit slips. So, as the name implies, cash withdrawal slips are proof given by the ATM or by the bank that money has been withdrawn from your bank account. I suggest that these are obviously filed because they will help you reconcile your cash book and your bank account. And I would also mark the slip. So I withdrew €100 for float for the end of exams batch, for example, and I mark it accordingly. Or I withdrew €100 to top up the petty cash, and I mark it accordingly. This is cash deposit slips. Cash deposit slips work the other way around. They give you proof that you deposited money in your bank account. The same goes with deposit slips. I would file them and mark them accordingly. This note with cash deposits, I wouldn't deposit all the money I have all at once. I would segregate them. So if I've been selling tickets for a ball, for example, and I want to deposit the money, I don't mix it with other cash. I deposit it by itself. I'll have its own unique cash deposit slip and mark it accordingly that they were related to the ball or whatever. So the next file that I'm going to go over is the expenses file. This is a very easy way to keep track of one, what outstanding expenses you have and what payments have been going out. So this file, basically what I like to do is you have a basic file with A to Z dividers. You would sort you would file suppliers alphabetically and then chronologically. So for example, Melita would go under M, and then the newest bill from Melita first, and it goes down to oldest. So we have someone like, for example, Mario Caruana, it goes before Melita, obviously, because it's handmade, simple stuff. The main documents you'll be having here are quotes, invoices, and receipts. Quotes, invoices, and receipts, we've spoken about them. Quotes are very simple. They are just, when you ask Teuma, we call it in Maltese, but basically when you ask a supplier for an estimate price. So you tell him, what if I were to rent this screen from you, how much would it cost me? He gives you a document with the price, but you are not yet committed to the sale. So if I were you, I would attach quotes, invoices, and receipts, which are pertaining to the same service, together. So first I receive the quote, then I decide to move forward with the sale. I get the invoice, I pay it, I get the receipt. I attach everything together so that I don't have a lot of papers running around. Another good tip is to mark invoices which are paid, even including maybe the check number or the way by which it was paid. So for example, I received, the same example, I received an invoice for the rental of the screen, and I paid by check number HSBC 21. I obviously mark it paid and write HSBC 21. If I'm paying it by bank transfer, I write that it's bank transfer and write the date of the bank transfer, because it will make it much, much, much easier for you to find in the bank, in the online banking system once you do it like that. Also, once you mark them as paid, you are giving yourself peace of mind that you know what is paid and what is not, instead of having to check every invoice if it was paid or not. So that is all with regards to hard copy filing. It is the simplest form. And we'll move on to soft copy filing, because these days you'll obviously be receiving a lot of stuff through email rather than just hard copy papers. Just an events folder is something good to keep. Here you would store the budget and profit and loss document. This will show you a template and go in detail what a budget and profit and loss document entails. The budget would be planned in advance and include the actual and variance analysis, while the profit and loss would be the actual income and expenditure. Apart from the budget and profit and loss, it would make sense to keep soft copy documents relating to the event, so invoices and receipts which relate to a specific event, they can be stored here as well, so that once you go on that specific event folder, you have an overview of that event, how it went, the profit, loss, any hiccups that came up. Next would be a bank and cash folder. I suggest you keep the cash books here. We'll go into more detail about how the cash books work. And bank transfer of proof of payments. When you pay by bank transfer, it is good practice to save the payment slip. The internet banking gives you an option to do so. If maybe you're struggling with this or something, I'll leave my email later and I can walk you through it as well. The benefit of saving your proof of payments in a specific document means that if you are in doubt, if a supplier comes up to you, tells you that you didn't pay him, you can quickly go through your folder, search by supplier name, and if there is a proof of payment, you pay him. So it can give you peace of mind in that way. Remember that the more details you include in the name, the easier you will make it. So something good to do would be to include the date, the supplier name, and the service for which you are paying him. So for example, in our example, we would write the supplier of the drive-in cinema and the screen rental, for example, screen rental drive-in cinema 2020. And finally, we got the debtors folder. Debtors folder, in your case, you would use it to store list of invoices. If you have high volume of invoices, you can split them by debtor, but I doubt you will be having that much invoices to produce. You can also include an invoice template in there so that it will guide you on which invoice number is next. Because as you may remember, in the beginning I spoke that an important detail of invoices is that they have an invoice number. These invoice numbers are always one ascending. It is a unique number for every invoice. If you have the list here with the invoice numbers, it will be easy to know if you are on number 49 and the next one is 50 and then 51 and then 52, etc. So you don't make silly mistakes like that. So I think with regards to filing, that should be all, and we can move on to day-to-day transactions. So what are day-to-day transactions? Basically, they will be recording of expenses, maintaining of the petty cash book, selling sales to students for small things like tickets. You have an event going on, students are coming every day to buy tickets, or you're selling hoodies and students are coming every day to buy. It's important that these day-to-day transactions are actually done day-to-day, and they are done well, so that you will not, because if you have a good foundation of day-to-day transactions, it will be much easier to get a profit and loss done, or to pay your debt returns, or to create a profit and loss for the end of year AGM. Some points to keep in mind are recording transactions in an accurate and timely manner. Recording transactions in hindsight will only lead to errors and guesswork. You think you will remember, but you forget. That's the number one thing that I learned from KSU, kind of that. You think you will remember stuff, but if you don't document them, you will forget them. And that moves us on to a principle which I like: not documented, not done. If you don't document it, if there's no documentation of this transaction happening, so if a student came and bought a ticket, but we don't have anything written in the cash book, we don't have any record of it, we can treat it as not done. So you document things immediately, or you don't document them at all. Documenting things as they happen will reduce room for error and forgetting, and it makes it easier for you to just document transactions. And if something is not there, as we said, you can assume it did not happen, since we rely on the principle. It's constant communication with members of the executive. You need to know what is being spent and what is being received by the organization. Since you're all volunteers, you may not be there all the time at the office during these transactions, so it is important that you build a level of trust with your team and communicate frequently. There's systems in place to reduce human error. Use Excel, use the cash book, use budgets, use profit and loss account, use a petty cash system. We will be going over all these, but these help you to reduce human error. If you're just scribbling whatever paper you find, you'll make mistakes. So just keep everything centralized, everything neat, everything organized, and you won't have any problems. And these are some examples cash received by students, payments, etc. Well, moving on to the petty cash book. This is something I'd like to mention on the day-to-day is, I don't know if many of you will be using these tips, but for the big organizations maybe that will be using them, I will be going over them quite quickly. So debtor management, you need to manage your debtors, because if a lot of people are not paying you, you will end up without cash flow, and it's useless doing sales and not getting paid. So you need to do proper debtor management. A good tip is cash on sale, which, as we mentioned before, with students, when you're selling tickets, when you're selling stuff for a low amount, and you're selling them in high quantity, you're selling to 200 students, 400 students, have a policy of cash on sale. Don't make exceptions, because it will only lead to you forgetting and then missing out on that 20 euro, missing out on that 30 euro of that sale. Stay payment terms up front. This is customary usually when you have a sponsor rather than when you have a student. So a sponsor you have an agreement with a sponsor that will pay you in periodic with periodic amounts, kind of every 3 months, for example. Make sure you state the payment terms up front and make it clear with them, because if you never talk about this, they will try to elongate it as much as possible. They have their own responsibilities to make and nobody likes paying expenses. Invoice promptly and correctly. This is very, very important. If you agreed that the sponsor will pay on the 1st of every month, for example, make sure that on the 1st of every month you send out an email with the correct invoice with the correct details. Because if you do not send it out on the 1st, I don't think that they will come forward and pay you without an invoice. So it is best that you invoice according to your payment terms. Timely reminders. Timely reminders are important when someone is not paying you. It's important to remind them and do it not just sporadically. So you remind him this month, and then next month you didn't do anything, and the month after you call. The debtor will know that you are not chasing him consistently, and they will defer the payment as much as possible. So timely reminders every 1 week, for example. And record communications. Record your communications with the debtor. So if you called him today, make a note. If you sent an email, make a note. If you told him that he's going to pay next week, make a note, call him next week, ask him why you need to pay. If you record these communications, it will give you an edge up, and make the debtor know that you are kind of awaiting this money, you need this money, so you will be more prompt to pay it. Yes, so we'll move over to creditor management. I don't think you will have a lot of creditors, because since you're small organizations, still tend to pay on time mostly. So the first step, in fact, of creditor management is to pay on time, stick to agreement terms or payment terms on invoice, because paying late runs the risk of tarnishing your organization's reputation. And if you fight with a supplier, they won't supply you anymore, and you may lose out on cheap service that you may be getting. So when working out payment plans, be realistic. So if you have a creditor and it's a hefty sum, and you've decided on a plan to pay him every month, for example, to pay the bill every month rather than pay for immediately because you don't have the funds, be realistic. Don't promise more than you can actually meet, because that will lead to arguments with the supplier. So a rolling budget can help you understand what funds you will have available at the end of each month. So we'll be going into more detail what a rolling budget is. And finally, do not let creditors accumulate. It is important, because you may defer the payment today because you don't want to deal with the issue today, but next week you'll have this creditor and the next creditor, so there'll be too much and you won't have enough funds to pay them on. So one final thing about cash management, because cash is something that I guess as an organization you deal with a lot. So it is important that you manage it well. Timely and structured deposits are important. We mentioned these briefly, but if, for example, you have a ball and you've got 1,000 students at 40 euro each, that means 40,000 in cash. What are you going to do? Wait until the event is over and deposit 40,000 in cash, leave 40,000 in cash running around in your office? No, that would be unsafe. It runs a risk of appropriation, of miscounting, of theft. So what I would do is, for example, every 5 pages of tickets, I'll deposit. So timely deposit. Structured deposits means you make sense with your deposits. If I have 1,000 euro, 800 relating to the ball, and 200 relating to a fundraising event I have on campus, don't deposit them together, because you'll get one deposit slip for €1,000, which does not discern between the 800 and 200. I would deposit the 800 by itself, get its own deposit slip, mark it appropriately, €800 ball, €200, and then €200 you deposit it separately and get a separate deposit slip and you mark it accordingly. That way, it makes it much easier to make sense of the numbers later. It's important that you have a secure cash box with restricted access. If you're keeping cash in the office from these gradual tickets, bond tickets, for example, make sure you have a secure box with restricted access. So maybe only you can access it, the financial officer, or maybe only the president, or maybe only the event team. It depends on the situation. But it can't be just open and everybody has the keys. A petty cash book and till box. It isn't a petty cash book and till box would be separate to the cash box. So a cash box would be there to receive money. I'm receiving money from sales. It does not exit money, only receipts. A petty cash book works the other way around. It is petty cash, petty meaning small, so it's a cash book for small expenses. You have only money coming out. It is important that you have another box for it, and the up-to-date cash book, it doesn't have to be a physical cash book, obviously it can be an Excel sheet, to keep track of this money going out. As you can tell, a week will pass, various expenses will have been spent, you didn't keep track, you had 200, you now have 50, where did the 150 go? Nobody knows. So it's important that you keep track. So, another point is to minimize reliance on cash. So consider setting up a Revolut account, for example. These are all tips that can help you reduce cash. Revolut, using checks, using internet banking, very, very important rather than just relying on cash. And you can also use a form when giving cash to exec members. So, for example, Yasmin came, she wanted €20 for printing, but she doesn't know how much the printing will cost. She gave her €20 because she knows €20 will cover it. It is good practice to have a form indicating that you gave €20 to Yasmin on this date for printing, for example, for this event, and you both sign it. So if the €20 goes missing, so if you do not know where the €20 went, you have the form, and you can have peace of mind that you know that the €20 went for printing, because you will not have a receipt until Yasmin comes back with the receipt and the change. Well, moving on to the cash book. A cash book the cash is the responsibility of the financial officer, and as we said, is the most difficult to keep track of. Cash has no audit trail, we call it. Because if I spend €20, there's no proof I spent it. If I send €20 for internet banking, there's the trail on the internet banking. Petty cash deals with small monthly amounts which take place on a regular basis. And as we said, the petty cash box should be kept under lock and key, only accessible by the financial officer. It is used to keep track of small cash transactions without affecting the bank. You should, let me just put up the just put up the template so you can understand better. Okay, what's there?
And the presentation. Slide full.
Okay.
They're not the screen or not? Alright, okay.
Alright. So here in front of you, I have a petty cash template, which, if I'm not mistaken, Yasmin will be sharing with you, so you can basically use this for your organization. I'll be going through how to use it. You start off with a balance. So let's imagine that this is the September petty cash book. We have September up here, and we're starting out on the 1st of September. We have a balance brought forward, the opening balance. We can write this as opening balance because this is the first time you are doing a petty cash book. And you are starting off with €200. This €200 is arbitrary. You can choose how much money you will keep, as in it depends. You will know. So how much does the organization spend in 1 month? Is 100 euro enough? Do we need 500? Do we need 100? It's the amount you think your organization spends in 1 month or in 2 weeks, the period of your cash flow. As the months go by, you will have expenses being incurred. So I got 20 euro for printing, for example, 45 euro for ice, for example, 30 euro for some banners that we had to print, and 650 for some batteries because the microphone went. This will sum up your total payments. And here we subtract your opening balance from the payments. And you have to top up by 98.50 to get back to the 200. It is important when we're using this kind of petty cash system is that we always start off the month with the same amount. So if I spent 101.50, I need to top up by 98.50 to get back to 200. Had I spent less, so 20 euro less, I would have spent 81.50 and then it's top up by 118.05. I think I made a mistake in the calculations, but I'll fix them for the template. But you get the gist. Basically, you need to top up to get to 200 every time. You're always getting up to 200 at the end of the month. So if you start off October, you always start off with 200. And then you're spending again, the total payments, and you top up with the same amount, with a different amount to get back to 200. Any questions with regards to the petty cash before we go on, because it may be a bit difficult. No questions yet.
We can. I don't have any questions from my end, but we can continue, and then if anyone has any questions, feel free to write them in the chat, and we'll get back to it.
Right. We'll put up the PowerPoint again. All right, different petty cash flow is budgeting. Budgets are very important. Budgets let you. Budgets are important because they set an expectation. I can never know if I did well in an exam if I didn't know what to expect. If I don't know the class average, or if I don't have past history to compare to, I don't know if a 60 is good or bad. If the exam was very hard, or if I didn't study, a 60 is quite okay. But if I studied very much, or it was an easy exam, where I get a 60, you should have expected better. So with a budget, you are setting expectations. So it enables a financial officer and the events team to better prepare for events and different eventualities that may happen. It is thus vital to budget before every event. As we said, it sets projections and expectations. Post-event actuals are then compared with budgets called variance analysis. We spoke about it, variance being the difference, analysis being an analysis of the difference, variance analysis being analysis of the difference. This allows the organization to understand what went wrong, what went better than expected, and what can be improved next time. Such an analysis improves budgeting skills as well as the event performance, because we now know what effort, the weak areas which we need to give more effort. So if this event we budgeted that 100 students would attend and would attend, and 70 students came, and we know this is a recurring thing throughout our events, we know that we need to focus more on marketing, on reaching the student, to have more reach, kind of more attendance. So let me just put up the budget template.
Right.
Let's see if I can how one does a budget is basically you have to sit down with the events team. That's for sure, because you won't be dealing with the event directly. So you have to sit down with the events team and analyze every item of income and expenditure. When possible, you should try to estimate how the item will cost, how much the item will cost or earn. some element of research may be required. So, for example, if nobody knows how much rental of screen and projector costs, it would make no sense to just put a random figure, because that it would be a useless budget. So it would be best if someone can collect a number of quotes, and you can base your decision on a price versus quality as they fit into your budget. Yes, in front of you, you have an example of a budget. So this is the budget, this is the budget also, and here you have an actual. So this is both the budget and the profit and loss combined into one document, which makes it easier for variance analysis, as you can see here and here. Well, let's start off with revenue. So revenue, we can create a kind of staggered display. So we have an estimated, so we have 3 price points. We can either charge, so for example, we're holding a party, a small welcome freshers party. We can either charge €5 and we can expect 150 people. We can charge €7 and expect 100 people. We can charge €10 and expect 70 people. It's obviously from this decision, you're a student organization. So your aim is to make money, but obviously it isn't to make money only. You're there to reach students. So you would choose the €7 and getting 100 students because you have more, so 30 more students at your event than you charge them. And also having 30 more can result in more spending. So if you have a bar there, you can earn more money from the bar if you have 30 more students there to spend money. It's somehow to move on to the profit and loss kind of. So here you have your income. We're budgeting 700 based off ticket 700 based off this projection we did here. And we're budgeting €1,000 in sponsors. This can be based off decisions you took in the past. So for example, you have sponsors you know that are covering you, or you know that certain sponsors are eager for these types of events, so you can set these budgets. And you keep going like that for the expenses as well. So I budgeted these amounts, which brings us to a profit of total expenses, sorry. So total revenues are 1,700 budgeted, and total expenses are budgeted at 1,225. But the event takes place, and you're going to start recording the actuals. We had more students than we anticipated. That's very good. So we had 800 rather than 700. But sponsors were less, were 200 less. This could be, and we have a variance of 200. This is where variance analysis plays in. Why did we have 100 more from tickets? Why did we have 200 less from sponsors? You sit down with the events team or with the rest of the exec, it depends on what kind of event it is, and you analyze. Because if you understand the mistakes you made here, and you can apply it on the next event, it will help you improve very, very much. So, for example, the 200 may come because the event was planned too late. We didn't have time to chase sponsors. You didn't have time to create a good proposal, or your good events were being wasted on your good sponsors were being tied up on other events, and this event could not generate enough sponsors. And then why did we have 100 more in tickets? Was it because there were no other events on that Saturday? Was it because we focused a lot on marketing? Was it because we had the competition on campus? If so, maybe we can analyze that competition it's effective, an effective marketing channel. And
so maybe you can zoom in a bit.
Yeah, yes, of course.
Perfect. No. It's still here.
It's going over the expenses, it's the same gist. So I had my venue, I was expecting to spend 800, but I spent 1,000. Why did we spend more? Maybe the 800 was unrealistic. Maybe there were some damages, and they charged us 200 more, we kept €200 deposit. And you take notes. You take notes for everything that happened. So you can learn from mistakes. Black box thinking, it's called. It's a fancy term, but you're learning from your mistakes. And here what we have a summary basically. So my budgeted income against my actual income. So budgeted income minus budgeted expenses would have brought a profit of 475, but in actuality, I had a profit of 150 because my income was 100 less and my expenses were 225 more. And I think budgets, if you don't have any questions that you'd like me to go into more detail about, I think we're okay with this part of budgets and profit and loss.
Maybe something which comes to mind for me would be sort of after the event, how important is it that you actually follow up on your budget so that you make this comparison between between the budgeted income and expenditure and the actual income. So would you suggest, for example, coming up with a post-mortem report for after the event has occurred, so you can sort of have a clear picture of what happened, why this happened, and maybe so that it can be documented and it does not happen again.
Exactly, it does not happen again. It's very important because this isn't just from the finance point of view, isn't it? It's important from an organizational point of view. Because if you're setting expectations but continuously not meeting them and not looking back and saying, all right, I didn't not meet them, you won't know that you're doing mistakes. So by doing the post-mortem, you're growing as an organization. And if you do create a report and you do file it appropriately and you do leave it in your handover for the next exec to come, you're giving value to your organization, possibly much more value than you could have done from your events, from your work during the year, because during the next term, the new members can go over your notes, go over your reports, and not repeat your mistakes. So that's the value of a post-mortem report, kind of.
Thank you.
Yes, we'll be moving on to another type of budget, a rolling budget. Yes, a rolling budget is used to paint a picture, a financial picture of the upcoming weeks or months. It is used to forecast the cash flow situation in advance. It allows for better planning of the limited time you have in office, ideally for executive meetings where you'll be brainstorming ideas, events, and ideas which cost money. A rolling budget allows the financial officer to forecast whether funds will be available for proposed events, and in the case of a shortfall, you can direct the executive's efforts where they are needed most. Now let's quickly go over a rolling budget because I think we're running out of time. Well, rolling budget.
Yes, I can see.
Here you have a small example of a rolling budget. So you have the months. So let's imagine we are December. Christmas is coming. We have an exec meeting. It's late. We're starting holidays, and you're planning what you're going to do from January to May. Well, you know you have 10,000 euro on your bank account right now. Let me just remove these to make my explanation simpler. Yes, and you're planning what's coming up. So you have 10,000 in your bank account, and the exec are brainstorming ideas. Everybody has a lot of ideas. Everybody wants to spend a lot of money. And as a financial officer, you're not enjoying that everybody wants to spend a lot of money. So you need to see how you're going to allocate, how you're going to match these events with inflows or with funds available. So, for example, you want to say there's in the pipeline there is that you want to have a debate on campus in January, right after the holiday break. It will cost approximately 200 euro. So now you know that at the end of the month, January, you have 9700, and opening of the month of February, you have 9700 for each month. So now you know already that you cannot commit to a cost of 10,000 in April because you have 9700 left. Issa, you would obviously want to offset that with, for example, a fundraising event also in January, which will bring about 200 euro. Issa, you have 99. And you keep going through the rolling budget like that. So, for example, come March, you have your AGM and there will be a new exec, for example, or you still haven't done your meet the exec because of Corona, and then March everything will clear down, so you posted your meet the exec, but it will cost you 200 euro. And you put it down there, and you now have 97 left for the remaining 2 months. So, for example, you pass out some freebies in the exec event. You host a workshop costing 600 euro, you get an expensive speaker since you have a lot of money left in April, and you see that you now have 9,000 at the end of the month. So this, like as I said, paints a picture is the most ideal term. It gives you an insight into what's going to happen in May. Do I have enough money in May to commit to this event? So if you have a big event coming up and it's costly, are you going to be able to pay 9,000 euro? Or if we're setting out payment terms with a supplier, can I pay 9,000 every month? I can make it, for example, 2,000 every month, and I still be okay. And obviously, you can do the same thing with the inflow. So if I have a big event coming up, workshops, 11,000 euro, a big conference coming up, and I'm getting people from all over the EU, organizations from all over the EU, and this I have a shortfall of 1,400. But I need a sponsorship of at least 2,000 to be in the green again. But obviously, you'll be making a loss of that event. And we're not going into much detail about that because that's a bit common sense. But so we can offset inflows and outflows like that. I think that should be clear with regards to the rolling budget.
And do you suggest that, for example, if I am part of a small organization, I am the financial officer of a small organization, and I don't have as much money in my bank account, so it would be very difficult for me to be able to or to plan ahead for all of the events and make sure that I have enough money for all of them. Do you suggest that, for example, I create a rolling budget which I can plan out for the year ahead with estimates of how much my events will cost me, how much I am planning to get as income, and then use another one with the actual...
Very good point, very good point. The point of a rolling budget is it's rolling, it's continuously updating. Budget is useless if you just input the figures and leave it like that. So as Yasmin said, a very good point, you estimate them from the outset. So for example, yes, we're saying that we may have an event in March. I write it down, it's 200. But as we get closer, obviously, let me just say this. So I wrote it down as 200. What I am doing for myself, I have just created a mental note that I need 200 there. It is written that I need 200 by March. So I will obviously earn myself or start giving the exec to start earning the 200 so we can host the event. Also, as we get nearer to the event, so as it's January passes, February passes, we will get a more accurate figure of the 200 because we start getting quotes, we start getting invoices, and the 200 will know for sure that it will be 225, for example. And that way, we are continuously updating our rolling budget. I think I answered
Yes,
the question.
yes, thank you.
Profit and loss. Yes, it is a statement that summarizes revenues and expenses in a given period with the resulting profit. It is also called an income statement these days, rather than a profit and loss. And it would be more accurate in your scenario to use income statement rather than profit and loss, because you are not there for profit, you are just there to report income and expenses. It may be used for specific events, as I showed you, that budget and P&L is used for a specific event. But more generally in business, they are generally used to show performance of the year in question. So I would create a profit and loss for the year 2020. I earned 10,000 in profit in 2020. It is good practice to present an income statement in the AGM at the end of the term, so you can showcase you as an executive, your profitability, how you spent your money, how you earned your money. It helps with transparency and it holds the organization accountable to the suited body. Mela, issa, since Yasmin spoke to me about the VO, I decided that rather than create a template for the profit and loss, I would just go through the template of the VO and we can deal with profit and loss through there, because I will be getting two birds with one stone. The VO comes in really long.
Office of the Office of Commissioner
Commissioner of the Voluntary Organization.
Commissioner for Voluntary Organization. Rolling budget. No.
But as you can see, the layout is very simple. You have income for the year, and expenditure for the year. So here you just list all your incomes and you list all your expenses. So just a note, if you have, for example, a ball which created a profit, I wouldn't list every item of income of the ball and every item of expenditure of the ball. I would just write profit from ball and write the profit from the ball. If it was a loss-making event, the same would apply. Loss from ball and loss from the ball. Issa, let me just mention something which will tie in what I mentioned earlier with regards to filing. Listen, you may ask me, how am I going to know the total amount of stationery I spent in a whole year? Well, if you file, as I said, with the expenses file in the alphabetical order A to Z, you can just go quickly onto P for example, up here, add up all these receipts, and you'll have your stationery and printing for the year. If you have more than one stationery which you use, you're a small organization and you keep a mental note. As in, you'll have, for example, papier, copy club, and someone else. You'll have papier, copy club, and someone else. For example, internet, you can have Melita, salaries you won't have, professional fees, you may have a lawyer that you use, and you can obviously go through suppliers one by one and add them up and categorize them according to how they are here, or you can always add more expenses as you wish, because these expenses don't all apply to you. For example, repairs and maintenance motor vehicle, repairs and maintenance office buildings and equipment, they don't apply to you. You don't own these kinds of assets, most of you, so you don't need to worry much about them. And the excess of income over expenditure would be surplus and deficit. If it's a profit, you write it here. If it's a loss, you write it here. This I just wanted to go over this quickly because it may sound a bit intimidating, but it's not that hard. Cash at the beginning of the year, I suggest that when the year starts or when you start your term, you take a note with the previous financial officer of how much cash there was in the business. Because if you do not do this and some problem comes up, nobody will believe you when you say that there were X amount of cash, but instead there were less than that amount of cash. So it would be good practice to cover your exes, being very blunt, that you take a note of how much cash there was in the beginning of the term when you took office. And for this, you take another note how much cash there was at the beginning of the year instead of at the beginning of the term. So this would be simply adding the cash you have in that first cash box that we spoke about, the cash box that deals with money coming in, and adding the cash of the petty cash box, which goes out. At the beginning of the year, it should be always the same amount, because as we said, the petty cash box should have always the same amount at the beginning of the month. But at the end of the year, the same thing. Just take a note at the end of the year. And the movement would be end of year minus beginning of year. Current accounts is the bank account. And you just use your internet banking platform to get the bank statements and get the figure for at the beginning of the year and for at the end of the year and the movement. Savings and the rest, I will not be going over them because I'm positive most of you don't have them. But if some of you have an investment or shares of some sort, you receive periodic statements. So take a statement from the beginning of the year and a statement from the end of the year and complete the difference. Well, moving on. VAT. VAT, most of you, I am positive you do not have to worry about it. So I will be going through VAT and how it works and what you need to do, but I wouldn't worry too much about it if you do not skip the threshold. If you do skip the threshold, then yes, worry a bit. So the threshold for VAT registration is 20,000. If you skip the 20,000, you need to register under Article 10. What does this mean? You need to file VAT returns every quarter and you need to charge VAT on your sales. If you don't skip the 20,000, you need to register under Article 11, which means you don't file VAT returns and you don't charge VAT. A lot of, since your organization's not for profit, very small, and you don't skip the 20,000, I suggest you don't even apply for Article 11 because it will give you a lot of trouble and you will not have any added value and you will not be paying any VAT to the government. So you can just not worry about it. If you do skip the 20,000, I have a link here which I will be going through the application process. It's very simple these days, you can just do it online.
And is the 20,000 revenue or income?
Turnover. So it has to be revenue. So if I am earning 20,000 but spending 10,000, you still need to apply because you're earning 20. Your whole coming in is 20,000. Coming in is 20,000. Yes. But I want to present to but this is the, can you see the application?
Yes, yes.
But this is the application for a VAT number. Before I go through this, I suggest that if you skip the threshold, rather than going through this application online, you contact the VAT department. Contact them, tell them, hey, we're this organization, we do this and this and this. We change our team and our executive members every year. We're not for profit. Important that you stipulate that we're not for profit, and important that you stipulate that we change every year, and inform them that you skipped the threshold. And they will direct you on what to do. Because given your situation, they may instruct you not to apply for VAT, or they may categorize you in a different category. Because keep in mind that when you are applying, as you can see in front of me, it will ask you for some personal details. You will change, obviously, and if 3 years down the line there is a problem with the VAT, they will start calling you, they will need you to verify for the stuff. The new team members will not be able to change any details without your knowing. You may be abroad, you may be busy with work, you cannot come over. So it's very, 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 very advisable that you speak to the VAT department. We're this organization, we're not for profit, as I said, and should we apply for VAT, we skip the threshold, what should we do? And they will direct you from there. Maybe they'll tell you to apply for the VAT as usual. So these are pretty simple stuff. So your names, obviously, so this should be the financial officer or the president. Business address, this should be student's house. This is business details, but groupings, no, you should be under other. But it specifies student organization, number of partners. I would write the number of exec members, operated part-time, branch is 0. Economic activity start date. This one I would use the start of your term, because as far as you're concerned, you only know us as the start of your term, because it's your first time applying. Workers, no workers, branch, put in the bank account numbers, and your estimated turnover. Your estimated turnover here. Declaration, you apply. Normally it's a standard form. I don't think there should be a lot of issues there. It's a VAT returns are to be filled every quarter, and dates differ according to registration date. Deadline to submit VAT is on the 15th day of the month, following the month after the period end. So if the period is January to March, the deadline would be 15th May. If you're doing them online, you are granted an extension to the 22nd of the month. Let me just quickly go through the VAT return, just so you have seen it. This is a VAT return. Yes, regarding VAT, let me just go to this. Yes, these I wouldn't worry too much about them. You have to worry about, sorry, this and the first one and the second one, I wouldn't worry too much about them. So 1 to 4 and 9 to 11, I wouldn't worry much about them because they are related to EU goods and exports. So you would go, the first box you would fill are sales at 18%. So box 18, you fill the total amount of sales minus VAT, and 23, you fill in your VAT. On the other side, you have expenses. You fill in 27 and 34 because mostly are with 18%. Yes, some of them are with 5 and some of them are with 0. For this, I suggest, because given the time constraints and given the topic is a bit complicated, I didn't include the template for VAT, and I am not going into any much detail. This any organization that has to apply for VAT and is currently has a VAT number, but they do not know how to fill in their VAT returns, I have a very easy template which I use for some personal stuff, which can let you keep track of VAT and how much VAT you have to pay and fill your VAT returns for you. So I would suggest, if you want, just contact me on my email address and I'll be more than happy to help. And with regards to the VAT return, I think I'm going to stop here as we're running out of time and it wouldn't make sense to waste more time on it. The last topic I have is regarding handover. Handover is very important to have a good handover because the person coming in before you, now after you, will not be used to the organization as you are and can undo a lot of your good work if you do not perform a good handover. In the same instance, if you did not do good work, you will have a very hard job. So keep that in mind when you're organizing your stuff. Good filing and documentation practices help with a successful handover. Obviously, if you have your files in order and you documented everything as you were supposed to, it will be much easier to explain stuff to him, and it will be much easier for him or her to understand. Systems in place you put in place today can help an organization years down the line. If you manage to run a whole year with a petty cash book, you have proof of your petty cash book for reference, and you explain it to the next financial officer, you will start doing it. So you will have created value for your organization. They will keep on doing it throughout the years, most probably, and they will add on to them, create more systems to work more efficiently. This is something which I believe in very much, is shadowing. Shadowing is when you and the new financial officer work together in the same role. So for example, your last 2 weeks and his first 2 weeks would intersect so that you have taught him everything and he or she is performing with your oversight. It is an opportunity for the newcomer to practice with your oversight. One final thing, one very important thing which I'm going to mention is the change of signatories. As you know, for a check to be valid, a check has to be signed by specific people in an organization. So that would be most generally the finance officer and the president, or maybe the president, finance officer, and the secretary generally. These obviously, since you change exec every year, you need to change them every year. But the bank is very strict. If Yasmin was finance officer before me, and I am the new finance officer, and Yasmin did not perform a change of signatories, and I go to change the signatories, the bank wants Yasmin's signatory as well. So make sure that before you leave, you get the new finance officer, you sit down together, you go to the bank, set up a meeting, and you change the signatories. If not, they most probably will not be able to access their funds, they will not be able to issue checks, and it will be a detriment for the organization who worked so hard for. I know some organizations from my time in PSU, they spent like 6 months out of their whole year unable to access their bank accounts. And it's a big pity that people were here to give value to the students and give value to ourselves and provide learning opportunities for us, and instead we tarnish our reputation like that. I think from my end, that's enough. I don't know if you have any questions you'd like to pose for me. I know it's a bit of a tedious topic, not tedious, but maybe a heavy topic, accounts and bookkeeping and whatnot. But I hope you learned something of use and value. Yasmin will be giving the templates, and If you want, there's my email address. You can message me there.
Thank you for a very informative presentation. I think that we tackled a lot of topics which maybe, even though we go into the role, maybe no one would have told us about. So we wouldn't think about filing corporate returns, for example. And it's something which obviously it's very important for us to do since we're obliged by law to do it at the end of the day. And at the end of the day, we're also obliged as student organizations to register ourselves as a volunteer organization. And if we don't have proper financial accounts, and if we don't do proper financial reporting, we won't be able to do that. So I think that all this is very important. If you have any questions whatsoever, please feel free to ask by either switching on your mic or typing in the chat before we close the workshop. With regards to Nicole's question, the templates can be sent by email. So if you applied to the workshop, I already have your email, and we can send them to you.
They want the template, how to fill in a vet, how to create vet entries. Basically, they can ask me on my email because I didn't send it.
All right. All right, no problem. So if you need the template for VAT, feel free to ask us, and we'll be able to send us by either emailing myself, and I will forward the email to Joseph, or emailing Joseph directly. From my end, I think it was very informative, and I don't have any other questions. I don't know if you have any closing comments.
Obviously, I mentioned it a couple of times, and you can see it from my email. I work with PwC. So PwC has a wide range of careers and internship programs for students that can work during summer. You gain valuable experience. If anybody is interested in these programs, I ask you to send me an email, and I can forward it to HR and find your place as well.
Thank you. Thank you so much. As another concluding comment, I just want to encourage you to also, apart from engaging with Joseph after the workshop, I also encourage you to follow our first speaker as well, Nathan Farrugia, on his LinkedIn account, so you can keep up to date with what he's doing and with any tips and tricks that he shares. From my end, that is it. I thank you all for joining us tonight, even though it is now 8 in the evening. I hope that this workshop was informative and that you've learned something new. And do not hesitate to contact me if you have any other questions which pop up after the workshop itself. Thank you and have a good night. And I would like to obviously, as a final note, thank our speakers for their very informative presentation.